Saturday, the 11th of July 2020. This week, a few of the ASX listed gold companies released their quarterly production updates. Now, these weren't full quarterly reports, but it's become kind of commonplace in the sector for seemingly more and more companies. Probably more than half of the companies now, producers, are releasing the production figures before they release the full quarterly report. Usually they'll release those production figures in the first probably 10 days of the month after the quarter ends, and then toward the end of the month, usually in the last week or two, they'll release the quarterly report where they'll have more detail, and I think the figures are audited and they have cost numbers. So this is becoming particularly, I think you tend to see companies that are in a good position or have a good quarter are more likely to release one of these production updates. If your company has done them in the past and has stopped doing them, it might be an indication that they're expecting, to expect weaker numbers. So I'm just going to go through a few of the ones that I commonly follow in this channel, some of the stocks that I hold. So the first one, West African Resources, no surprise, it's the first on my list. It's been one of my main holdings for a long time now. The update they came out with, all pretty positive. Processing 242,000 tons in the month, in June, and that run rate is, I think they're running at almost 3 million tons per annum, or a little bit less, maybe 2.9 million tons for the mill. And if you remember, I've talked about in the past that you can run the mill when you're running a lot on oxide ore. Often you can run at a much higher tonnage than if you're doing a full fresh rock. So I think they're still running majority on oxide, but then they've had a bit of development ore going through as well, which I think is what's boosted the grade. So they've been coming out with these updates every month, and you can see there that the grades gradually increased. So they were 1.4 grams in May, but in June they got to almost to 1.8, and I assume that's largely to do with the development ore coming into the mix. If they get another 10,000 tons of development ore or whatever, that can have a big effect on the grade, because it's a much higher grade number than the open pit. So again, another really good quarter, and also getting more of that development ore and that higher grade increases your recovery usually as well. So they got 94% recovery, which is another high. So 30, I think it ended up being 32,000 ounces produced for the quarter. I can't remember what I said in my last update, but I think my guess was about 30, and that was based on some of the production forecasts in here, which I'll talk about that in a second. But so I think it's largely on track. I've seen here that this double shift resumed underground, so presumably they were only working half pace due to the COVID restrictions, and they couldn't get staff in and out easily. So hopefully that means that they can progress with the stoping ore on schedule for this quarter, the September quarter. And cash and gold, they got 65 million cash and gold US dollars. This is so that was it was up 8 million, and I think it was flat on the month. If you go back to this. They're doing these monthly updates, so it's actually down on the month. So they had 70 million in the bank at the end of May in cash and gold, but then it was reduced to 65. But that's largely, I think, due to these one-off payments there. The Toega deposit one-off payment there of US $10 million, and they have the fees and interest associated with the debt facility. I think some people may have misinterpreted that this was an interest payment, a principal repayment, but I think this is just interest. They haven't started paying the principal down. I don't think they have to until early next year, but I think they probably will start to pay it down earlier, considering they've got, they're going to be pumping out really good cash flow pretty soon, and it makes sense to start paying it down earlier if you've got such a large buffer. You don't want to be having, you want to try and reduce those interest costs, which are fairly significant. If you're paying $5 million, I don't know if this fees is every quarter as well, but if you're paying $5 million US a quarter, that's a pretty large interest bill that you want to try and reduce as quick as you can. So I guess the thing is now, what's next? What's coming up for this quarter? I'll do a more detailed analysis of the quarterly report when it comes out in the next couple of weeks. But this stoping ore is pretty important. I showed this chart, and I think I talked about it last quarterly as well. You can see this ramp up here of the underground, as this is really what matters. I think they're assuming these numbers are still current, which it seems, I think they're still probably about right in terms of the timings of them. This came out at least 12 months ago, maybe 18 months ago now, this feasibility study. So I think we're still on track for that kind of September quarter there. You can see we're forecasting about 40,000 tons at a head grade of a mined grade of about 17 grams a ton there. So that works out to probably about 20,000 ounces, probably about that, depending on your recoveries and everything. But hope if they can get 20,000 ounces from the underground, and then you've got the open pit doing well as well, you're probably looking at more like 50,000 ounces in the September quarter. As I said, it's going to depend quite a lot on the timing of those stoping operations, if they can get that tonnage up. But I think all it's going to do is perhaps push it into the next quarter. But hopefully we see an announcement on the stoping having started soon. The other thing was that deep drilling is happening here as well. So they've commenced the deep resource drilling. I think I'm not sure what the timeline is. I think some of those holes take quite a long time, but we've started now. If they started it in the last quarter, in June, for example, and now we're into July, I think you could probably start. Maybe you see something in August, exploration results. Maybe mid to late August, you might see some numbers. So that's another catalyst for the share price. I think it's pretty likely that those grades do continue and sort of infill that area, but where they had those deep holes at about 700 meters, I think. So that's the other thing I'm watching. Obviously, the share price has reacted extremely well, and now closed at all-time highs. Had a really good day on Friday as well, I thought, considering most of the gold space was probably down. Most of the producers were down 2 to 4% probably. WAF was up 1.5%. So you're seeing that really good volume trend with increasing volume on increasing share price, and that's really what you want to see. So I think we saw Morgan Stanley sell out about 12 million shares this week as well. A substantial holder notice came out last night, so that's pretty good. We're seeing that changing the guard now to more probably generalist investors and generalist funds taking a stake and shifting out some of those people who are probably riding this from that wave that you get from the start, from construction to commissioning. Sort of a few investors sort of ride that wave up and maybe reduce their risk at the early stages of production. But it looks like everything's going pretty well. It's probably the best ramp up of a gold operation I've seen, to be honest. Nothing's gone wrong, but I'm always on the lookout to see if there are any signs. That stoping ore is the only thing that kind of concerns me, but it's still on schedule. But I'd like to see it come pretty soon, if possible. But it's still, like I said, it's really just going to be a shift in the timeline out to later. As I think the grades there, they've still done the reserve drilling for grade control, and I think it all was in line. So we're not expecting lower grades than what was in the feasibility study, as far as I can see. So all very positive, and it still looks undervalued at an $1,800 gold price, and getting full value for that gold as well. No hedging. You're going to be, if you're doing 50,000 ounces a quarter, you could be seeing cash generation of, I don't know, $40 million US quite easily next quarter, and that's if your all-in costs are probably around $1,000 an ounce, and that should be less really. That's why I'm saying they can probably start to look at paying back some of that debt pretty soon. So that'll be interesting to see, and I hope they keep doing the monthly updates at least until we get the stoping ore. I didn't talk about the open pit M1 South ore as well, which is a much higher grade than the M5 they're mining, I think, for a lot of this oxide ore. So I'm interested in what that is. They don't talk much about that M1 South open pit, and it's sort of a bit hard to gauge that in some of these numbers. That was also quite important in the first 18 months of the mine life. So, but I assume that's all on track. Maybe they just haven't ramped that up yet, and maybe they're focusing more on the underground. So all very positive there, and I continue to hold. I haven't been selling any in the last 6 weeks. I think I remember I've said in the previous videos that I was taking some off the table when it sort of came into these levels around sort of mid 70s all the way up to sort of the 90s. I sold a few just to diversify my portfolio a bit and reduce some risk. And I've talked about that probably a fair bit. So next stock, sorry, I might talk about St. Barbara first actually. This was another one that came out, I think on Tuesday. This came out. I thought this was a pretty good number. St. Barbara was probably one of the few stocks that I thought had good valuation upside in the mid caps. A lot of them had run very hard, but St. Barbara has been under pressure. It's still well below prices from 2019, partly due to issues at Gwalia. And I think I talked about this in the last quarterly, that they had reduced a lot of I think they'd sold forward a few of their ounces into the March quarter to really try and capitalize on that high gold price in the June quarter. And you see there, they had $86 million of free cash flow, of cash build in the quarter, which is a huge amount for a company. I'll talk about Saracen in a sec, but Saracen produced less or made less cash in the quarter on 50% more ounces, really. So, or maybe 40 to 45% more ounces. So it shows you, and St. Barbara is probably maybe half the market cap of Saracen now. So it shows you what the cash generation of St. Barbara can be if everything goes to plan. And in Gwalia in particular, you see here they talked about had 51,000 ounces, which is by far the highest number. And I mentioned this in the last video I did about St. Barbara, that everything's sort of tied together in these projects they've been doing at the Gwalia extension, that all the work that they were doing for the projects was probably impacting production, and because production was impacted, costs had increased quite a lot. So the mine is the price of the all-in sustaining cost is quite volatile if the production goes down, being a relatively low tonnage mine and mill as well. So you can see there that they've been producing around that $1,500 figure with the 40,000 ounces of production. But if you go back to this sort of 50 to 52 sort of area where we are now, your all-in sustaining cost probably more like $1,200 or even less. That probably included some of the costs associated with the extension project as well. So you could see a number on all-in sustaining costs for Gwalia about maybe $1,050 to $1,100, which is very good. And I guess that's really been driven by this increase in mine tons, or they said they milled 244,000 tons for the quarter, which I assume means that they don't think they keep many stockpiles. So they mined a lot more than they've mined for a long time. So you can see these figures here. They've been around that 150 to 160,000 tons per quarter, and then this quarter they did 244,000. So that's a huge increase. And they've talked about here improvements in processes and procedures following an operational review. So sounds like that potentially could be sustained. And I think they've also said here that they hadn't actually finished the ventilation shaft work. And I think the ventilation shaft work is to enable more mining to be done. So potentially they can increase that tonnage considerably more once they've got that ventilation shaft complete and they can open up another mining area. I think that was the main purpose of the project. So you could see that number, trend toward perhaps 300,000 tons milled per quarter, which pushes your costs down even further, and you get that great production up to maybe toward 55 to 60,000 ounces. So this is a big improvement, and I think the market probably didn't quite understand how it all fit together with Gwalia, or maybe they did, but they were just skeptical that it would work out. And this is the first sign we've seen of a really positive production update from Gwalia. And that's the linchpin asset of St. Barbara. So I've said in the portfolio update that I did a few weeks ago that I was buying the stock in the downturn in March. My average is about 207. So I'm really happy with that entry, and I think it seemed like the right sort of if we could get that operational alignment and that the share price had come under pressure, but the market was probably missing that turning point that was really in the cards. So I thought that was an excellent opportunity. So I think the stock's still got good value, good upside. They've produced that 85 million in this quarter. Now they've got, I think they're 90 million net cash. And if you keep seeing that 70, 80, 90 million build in cash each quarter, which I think is quite possible, maybe Simberi might be still the issue. I think it's forecast to come off a bit, but it had its best quarter of the year as well, I think. You can see there 28,000 ounces Simberi, but I don't know how sustainable that is. I think their FY21 guidance is probably going to be considerably lower, probably toward maybe 90,000 ounces, but still very good. And Atlantic Gold is really pushing along well, very, very low cost there. I think their last quarter, their costs were about 900 Australian dollars an ounce. So, and they had a better quarter this quarter, so you could see that lower than 900. That's probably the bulk of the cash generation, really. It may be producing as much cash flow as Gwalia from half as many ounces. So again, a very good quarter from St. Barbara, and like I said, they were one of the few stocks that I thought had really good operational upside, and at their current valuation, whereas the others are really just moving with the gold price. But what you want to see is that if you can get that operational uplift at the same time as a gold price uplift, that's a really good environment. So I think turned a corner in St. Barbara, and I think the stock will continue to trend higher. Who knows where, but I think at least $4 is, I think it can go easily above $4, $4.50 perhaps in the next few months. So that was very positive. Next one, Saracen. I think this pre-production, this pre-quarterly update probably underwhelmed slightly. I mean, I've been quite bullish on the stock as a sort of someone asked me about long-term holds, and I don't really have any, to be honest, in the gold space. The only ones that I probably end at my long-term in gold space in trading or holding these stocks is probably about 12 months. So if I can see a good look ahead for 12 months, with something like St. Barbara, Saracen, Perseus, probably the only ones that I thought I could really see that good 12-month outlook, and I'd be happy to hold them and not worry about them too much. And that's kind of what I've done. I think I've talked about how I bought Saracen last year, sort of toward the end of the year, probably between August and October, and I was happy to hold it as a sort of to underpin my portfolio and sort of reduce my volatility and get that gold price exposure and more of a quality operator. But like I said, I don't hold stocks for long term and just forget about them. This space is incredibly difficult, and you really need to pay attention, which is kind of why I try and do these videos, partly for my own purposes as well, to make sure I keep involved and understand what's going on. But so this quarter from Saracen was kind of a bit underwhelming. Like I said, KCGM I think was down. Overall, they were down about 12,000 ounces on the previous number. I think they got 158,000 in the March quarter. KCGM a little bit down. Thunderbox probably the bigger miss. I mean, it's not a miss, but they had such good operations there that I think they were pushing 50,000 ounces for the last 2 quarters, and then they only got 42. So it's definitely a lower production number. They did say in here that they elected not to process the higher grade portions of the stockpiles, and they'd mentioned that in the previous quarterly that they were going to try and do that. And I think maybe the market had anticipated that would really push up their cash balance and their production. Maybe the market was anticipating a number I was expecting a number higher than the last quarter, purely based on that processing of high grade stockpiles, because they do have a lot of stockpiled ore. I was expecting maybe they get their best quarter of the year quite comfortably and maybe push something like 170,000 ounces, but we're well below that. So I think the stock didn't, it reacted okay to this announcement on Wednesday, but it was, it's kind of an indecisive figure. And I think, when you look at what the gold price was doing and sort of probably the mean gold stock among the producers on Wednesday and Thursday, Saracen probably underperformed. So the stocks run pretty hard. I'm not a seller here because I still like that sort of, like I said, this is probably about the longest term hold I'm willing to have in the gold space at the moment. But the stock didn't, kind of topped out a little bit on that announcement. So it perhaps was a bit below expectations, but probably need to see the full detail. Maybe around Thunderbox as well. I'd probably be interested to see. I think they mentioned in here that there's going to be a whole suite of announcements coming with the June quarterly. So they've got resources and reserves, production cost outlook. So if they can KCGM and resources and reserves is quite important because I think the market's really looking to see what that asset can deliver in the next couple of years, and that would be the first sort of official announcement. If that's it's a bit unclear there if that's for every asset. What says each update, so I assume that means that KCGM will see resources and reserve update. So that's an interesting one, but as I said, I think the stock a little bit underperformed. And just like I was saying before, you can see that they produced 69 million in net cash flow or net cash build. And just to point out that St. Barbara number was, was 86 million on, like I said, 45% fewer ounces, or 30% in this case. So it's, it was a really good number for St. Barbara. Just showing that I really look at cash build as the main. All-in sustaining cost figures are okay, but you can't really you can't fudge your cash build in the over the medium longer term. So that's a number I always focus on. So pretty good from Saracen, but probably a little bit. They'd already pumped up the market perhaps for a higher number. Final one I'll talk about now, otherwise it'll take me all day. There has been a couple of other updates. Northern Star, I know it's a stock that quite a few people still hold. They came out with their numbers on at the same time as Saracen. I think the two companies kind of join at the hip a little bit now with the KCGM operation, so they try and sort of release those results at the same time because they're obviously 50-50 partners, so whatever one gets, the other gets in terms of production. So they came out, good result for free cash flow. I think their highest production of the year probably as well. Their last quarterly was pretty poor, but it looks like they might have turned that around a little bit. This quarter, I think they're getting probably it was about 20 or 30,000 more ounces in terms of production. Much higher cash flow, so I think maybe some of their project work that they were doing at Jundee's probably tailed off as well. So they're probably seeing the results of that work, and they don't have the capital spend as well. So I thought that was a reasonable number. This stuff about the dividends, largely, I mean, it's a pretty nominal dividend anyway at 7.5 cents for a stock trading at $15. I don't think anyone's really holding Northern Star for the dividend. I mean, if you bought it at $2, I bought it at $1 or whatever. Like I had some of my lines here. That was the first time I got involved. But sometimes you look down there and you think maybe I should have held it for that line. But that's another discussion. But the stock has kind of topped out here at this $15 level, and like I've said a few times, it's not a core holding of mine because I think there's probably less upside than a few other companies like Saracen, for example. St. Barbara are probably better picks in my view. So I don't really know what's next for Northern Star. They've still got Pogo on the go, so that'll be interesting to see in the full quarterly report. I think they mentioned in here that they were pretty happy with Pogo this quarter. So the KCGM is probably the asset with the most upside in the market. So if they can show some upside in that resources and reserve update, which I assume they'll release at the same time as Saracen, I'm sort of neutral on the stock, but I think it's quite overvalued when compared to a few others in the space who maybe have a few better catalysts in the next, say, 6 to 12 months. So I'm not an owner of Northern Star, and I don't really see a case to own it when there's other companies in perhaps better positions, in my view. So that's probably all I'll cover for now. And as I said, I'll try and do the more thorough updates of the quarterlies if I can. They can be pretty time consuming, but I'll try and fit in as many as I can. And I'll probably put up another video as well this weekend. Thanks very much.